All right, so good evening, everyone. Welcome to tonight's class. Apologies for maybe last week I wasn't around. It's not really due to any fault of mine. So this evening, I just had to say, come rain, come sunshine, our class must hold tonight. I trust that you had a very good and wonderful day. That one I want to believe so. So I've said tonight we'll be looking at 2 questions. I hope we'll be able to get to the peak of those 2 questions. But either way, even if you are not able to, I'll do all I can to ensure that you understand the logic behind it. What we do in group is basically the same thing you've learned. Please, you can kind of mute yourself, please. Mute yourself, sorry, if where you are it's not quiet enough. All right, so what we are basically doing in group, just like I've told you earlier, they are technically not different from everything we've learned so far. We're only trying to look at different dynamics, or I think the best way to put it, we're trying to look at just different pattern in which you can have questions, be it foreign subsidiary, be it piecemeal acquisition, be it joint subsidiary. It's still the same thing. It's still the same logic. All right, it still follows the same thing. I always tell people that if any accountant understands English very well, not just to speak, but to read it and understand, the moment you've learned the basics of it, every other thing is secondary. That is it. So moving forward, we'll start by solving November 2021. Question number 1. That's what we'll be looking at tonight. We'll start with that. Any interested person who is not really asleep can help us do the reading. Any volunteer can help us do the reading. I need a volunteer. No one is volunteering. Okay. All right, Adebimpe Akinfenwa, please go ahead.
Hello.
Hello, I have not seen the question.
You are not seeing the question. Oh, did I drop the question in the group? I think I only dropped the year that you had to look at. But if you want me to drop it in the group, I can do that too.
Please, are we treating November 2020?
November 2021.
Okay, 2021. Okay.
November 2021.
I will appreciate that you drop the question on the group.
All right, no problem. Let me see what I can do. Because
21 numbers.
All right, I think this solves it. Okay, so the question is there.
Okay.
November 2021. All right. Perhaps I can start the reading while others will join. Let's start from the requirements.
Requirement. I just start from the requirement.
Then just read the requirement A. Requirement B, it's an assignment. You are just to be at least be a consultant for once. So we start from just requirement A, and then let's go to the main question.
Okay, requirement A, prepare the consolidated statement of financial position for the Makoko Group for the year ended December 31, 2021, 20 marks. Then the main question. Shall I go to the main question? Question
Yes,
1.
yes, go ahead.
Yes.
So we know what we are doing.
It's a compulsory question which carry 30 marks. And number 1, Makoko Intercontinental Holding Limited is a global merchant of cash crops. A policy of strategic acquisition over the years has placed the company in a position to source for export products competitively. The lockdown arising from the recent pandemic posed a significant challenge for the export of their products throughout the year 2020. At a board meeting to review the performance of the company for that year and discuss the impact of pandemic, the managing director noted the significant drop in the general performance indices. In order to get a greater market presence and higher demand locally, the board decided to acquire the following investment on January 1, 2021. 60% of equity share of Ojodu Limited, 50% of 10% loan note of Ojodu Limited at par, 40% stake in the ordinary share of Egbeda Confectionaries Limited. In the opinion of the board, both Ojodu Limited and Egbeda Confectionery Limited are the biggest local customers of Makoko International Holding Limited and a control through shareholding will give the investing company greater stake in the operational decisions of the investee companies.
As much as, can you first stop there? Let me ask this question. As much as question A is concerned, is there anything relevant in what you've been reading? As much as question A is concerned, is there anything relevant in what you have been reading?
What I mean, there is not, except maybe the percentage.
Except for that percentage. Every other thing is just mere story.
Yes.
So because there are people who perhaps, because when you say lengthy question, your BP raises a bit, no. Or your high pressure raises, see that lengthy question, see how many pages question. It's just mere story. As much as question A is concerned, nothing there is just relevant. It's just, they are just reading story. That's just it. There's actually no question for them. They are just reading story. All right, continue with the story. Now to the question. Continue with the real thing in the question.
Okay. The draft financial statement of the company for the year are as follows. Statement of financial position as at December 31, 2021. You have the assets, and you have Makoko, Ojodu, and Egbeda. Non-current asset.
No, just go to the additional information.
Okay. Additional information. Makoko Limited pay 90 million naira for the acquisition of Ojodu Limited when the retained earnings of Ojodu Limited were 13 million. High. The fair value of Ojodu freehold property was 6.5 million higher than the carrying amount as at the date of acquisition. The valuation has not been reflected in the book of Ojodu Limited. Makoko Limited paid 14 million for the shareholding in Egbeda Limited when the retained earnings of Egbeda Limited were 12 million. Additional information 4. An impairment test as at December 31, 2021 showed that goodwill was impaired by 3.5 million, and the investment in Egbeda Limited was impaired by 0.8 million naira. Additional information of 5. During the year, Makoko Limited sold products to Egbeda Limited at a price of 8 million naira. These goods had cost Makoko Limited 5 million. Half of the goods were still in the inventory of Egbeda Limited as at December 31, 2021. Number 6, the company's issued share capital has not changed since the date of acquisition. Number 7, no dividend were paid during the year. Number 8, non-controlling interest in subsidiary are to be measured at the appropriate proportion of the subsidiary identifiable net assets. Required: A, prepare consolidated statement of financial position for Makoko Group for the year ended December 31, 2021.
Thanks so much for that reading. Yes, a lengthy narrative, but a simple question. And every question about group is simple, even if you've never heard anything before. Even if it's just with the knowledge you have in skills, there are some basic things. All of these things are just mere basics, okay? They are not complex or complicated. So I always advise people that just do all you can and look at it just the way you've seen the question and see how best you can solve. All right, so let's move forward, at least as if you are in exam hall. So no much stories because we are practically doing the same thing. We only want to pick out the lessons from it. Gerard, are you in the class or you are sleeping? Okay, he off his camera. So it means at least you are awake. All right, it's not easy to be a chartered accountant. Okay, so let's go ahead. We have the group structure. So we have, I'm sure Adebimpe does not stay in Lagos. Makoko, acquiring, Ojodu, and which one? We have Ojodu and Egbeda.
Yes.
I mean, I'm trying to set my PDF so well so I can see the question at the same time as we solve. So, okay, good. So Makoko dealing with Ojodu and Egbeda. Ojodu is how many percent?
60%.
60%. Egbeda is what?
40%.
So what's the percentage of NCI in Ojodu?
40.
What's the percentage of NCI in Egbeda?
This one is an investment, sir.
All right. Thanks for Miss Ma. So there's no NCI in Egbeda. I thought maybe somebody would say 60. So this is an associate, right?
Yes.
Egbeda is an associate to us. This is a subsidiary, okay? All right. What's our reporting date? Those are very important things that makes you flow. That's the confidence. Even if I don't know anything, If I'm able to solve it up to this level, I can drop my pen and go and submit. Okay. Well, what's the acquisition date?
January.
Are we told?
Yes, sir.
Okay, when is the acquisition due? Okay, the board decided to acquire, so it's acquisition at the beginning of the year, right?
Yes, sir.
Yes, January.
1st of January 2021. All right, so I think with this, we are fine. Let's now move forward. We are looking at the subsidiary tax work is to fair value of subsidiary net asset, right? Okay, so what's the OSC of Ojoju at acquisition day? We have 100,000.
100,000.
So reporting 100, no other issuance, retained earnings.
9
So at acquisition date was 13 million.
million.
Additional information 1. Makoko Limited paid 90 million for the acquisition of Ojoju Limited when the retained earnings of Ojoju were 13 million. Okay. The fair value of Ojoju freehold property was 6.5 million higher than the what? Carrying amount at the date of what? Acquisition. So fair value adjustment. Freehold property. Please, can you see my screen? No, I need to ask.
Yes, sir.
Yes, sir.
Good. All right. Is the freehold property depreciable?
Yes.
No.
Yeah, I don't think anything like that is said about its depreciation.
Yes, sir.
Okay. But don't worry, I can still keep it open for now. It's still. Well, I think if you agree that nothing is said, no wala. So it is non-depreciable.
Yeah, we can close it.
So we can close it based on your lordships. All right, so let's close. What do we have there? 100,000 plus 13,000 plus 6,500. We got 119,500. And this will be 12225 plus 6,500. That's 128,725. And that will give us a difference of what? 9,225. Are you all with me? Okay. So for those who are with me, let's move forward. So the next thing we can do now is to find our what? Goodwill, all right? So parent consideration. How much did the parent pay?
90 million.
90 million naira. So I can choose to put how do I put it? NCI. Anyway, I can show you the two methods, it does not matter. How is NCI measured? as a proportionate share of. So SI will be how many percent? 40% of 119,500. 0.4 times 119,500. That's what? 47,800. That will give us 137,800. And then I can look at the fair value
I'll find it.
of subsidiaries net asset. I hope somebody's not saying that I'm too fast, because I'm doing the same thing. 137,800 minus 119,500. That's what? 18,300. Remember the logic which I said? There are some topics you should at least know that even if they wake you up in your dream, you say, I know this. Okay. Then additional information 4 tells us about what? Impairment. That's 3.5 million. The second leg of impairment will go to where?
Second what?
Training earnings.
Learning.
And then the NCI.
3,000. Does it concern NCI?
That's when it's fair value. This one they say proportionate. So it's only
It's
go to
proportionate
fair.
share, so it does not concern NCI.
Yeah.
Those are the simple things we should not forget. All right? It does not concern what? NCI.
Yes.
You might choose to compute your goodwill when it is proportionate share like this. But for me, I just enjoy my consistency. So I can say this is the parent consideration, sub fair value. I will now say 60% of 119,500. 60% of 119,500 will give me 71,700. If I subtract it from 90,000, it will still give me what? 18,300. Still the same thing. Are you with me?
Yes.
Yes,
Hello,
sir.
are you with me?
Yes, sir.
Yes, sir.
Yeah, if
Yes,
it's
sir.
proportionate share, you can do it this way too. You are fine. But I tend to use this because when it is full goodwill, you have to do it this, and this keep me on the safest side. All right. So we can do it like this too. There's no big deal. Next thing I have there is goodwill, NCI, right?
Yes, sir.
So what NCI at acquisition? So I just pick my figure here, 47,800, right? And then NCI share of what? Post-acquisition reserve. That's 40% of how much? 9,225.
3,690.
You see? Anything?
3690.
3690. 3690 plus 47,800 should give us 51,490. Are you with me?
Yes, sir.
So up until this point, any question? If you ask any question up until this point, I will stone you from here. But any question, be free to ask your question. All right. This is additional information 3. This is additional information 4. Let's look at additional information 5, okay? Associate, right? You know, associate is treated using what? Equity method, okay? Equity method of accounting, all right? So for us to get associate with, say, initial what? Investment. What's our initial investment? That's 41 million, right?
41 million.
Then we look at share of what? Profit in associates. Because you're also entitled to profit. So what's the profit that the associates made from the date of acquisition till the reporting date? What's the profit made by the associates? It's simple. As at the time the business was bought, what was the retained earnings of associates? The retained earnings was 12 million, additional information 3.
5 million.
And what is the 12 million? Makoko Limited paid 41 million for the shareholding in Egbeda Limited. When the retained earnings of Egbeda Limited were what? 12 million. And now it is what? 17 million. All right?
Yes.
So it means that that is what? 5 what?
5 million.
Million. 17 minus 12 million. So that would be multiplied by what? How many percentage are we taking? 40 what?
40%.
40%. So 5 million times 40%. That gives us what? 2,000. No, be so.
So,
All right. But we are told that there's an impairment in investment, right? That's additional information 4. Okay. Additional information 4. It was impaired by how much? 0.8. That's 800,000 naira. Okay.
yes.
Don't go and put 8,000 because you see 0.8 million. 0.8 million is 800,000. Are you with me?
Yes, sir.
Okay. Any information that affects here? Any other information?
Yes, don't realize profit.
Oh, thank you so much. It means that we are in the same spirit together. At least unrealized what? Profit. Okay. Now, all right. So let's see. Let's read what is there. During the year, Makoko Limited sold what? Products to Egbeda Limited. Okay. So the parent sold, right?
Yes.
To Egbeda Limited at a price of what? 8 million. These goods at cost Makoko Limited 5 million. Half of the goods were still in the inventory of Egbeda Limited as at December 31st, 2021. So can somebody explain the concept of unrealized profit as it relates to this question? What are we going to do? Somebody should explain. Somebody should explain.
I think the profit as regard to the only the parent.
Okay.
I think associate it will affect our
I'm struggling to hear that baritone. If you can just raise it up a bit. No, I'm really struggling hearing you. Only if others can hear you, but really I'm struggling. That voice is too deep not to be heard.
Okay, can you hear me now?
Good. At least the first voice was like wicked.
I said since associate is the buyer, it's going to affect these workings.
Okay.
It's going to affect these workings. It's also going to affect our group retained earnings.
Okay. How will it affect
Hello?
it?
Hello, sir.
Hello.
Hello, sir.
Yes,
Yes,
I'm
sir.
with you.
In this case, we will have 3 million as already as in profit.
Mhm.
We also have a good that will deduct from the inventory because
Okay.
the question said half of the goods. That's half of the good is still unsold
Okay.
in the inventory of Geva. That's me. We will deduct the 4 million naira from the inventory.
Okay.
Hello.
Hello. Okay, last attempt. Let's hear a lady's voice.
Okay, I'm thinking because Egbeda is an associate, the unrealized profits won't come into play.
All right. Okay. That's also a nice attempt. Thanks to all those who attempted. There's no crime in attempting anyway. It's when you hear your view, either you are right or wrong. What is important is that at least you have an opinion. When something else is said, it's easier for you to now let me say juxtapose it with your opinion. And that's nice. Thanks for always making that thing. All right, let's look at it. During the year, Makoko Limited sold products to Egbeda at a price of what? 8 million. Okay. This cost had cost Makoko Limited 5 million. So normally, based on the concept of group, Makoko Limited should not have sold at a profit, right? Makoko should not have sold to Egbeda at what? At profit. But what happened? Makoko had sold at a profit of how much? 3 million, right?
Yes.
Which means in the books of Egbeda, what would have happened? This 3 million would have increased his what?
Profit.
It have increased it. In the books of Egbeda, it would have increased its cost of sales.
Yeah.
Because
Yes, sir.
normally you ought to get the goods at 5 million, not what? Not 8 million. Okay. So this is what we are going to be adjusting for. All right. This is what we are going to be what? Adjusting for. But do not forget that Egbeda Limited is not only controlled by. So we are looking at Egbeda Limited now, okay? Perhaps coincidentally, Egbeda Limited bought it from us, okay? But we should not forget that in Egbeda Limited, there are two ownership, right? Makoko Limited that we are representing, and which organization again? And then the subsidiary. Are we together? Hmm?
Yes, sir.
So us and then the what? The subsidiary. So that's one thing we need not what forget there. So it means that give or take, we are not taking a full responsibility because some part of Egbeda Limited is not controlled by what? By us. Are we together? So we are only going to show the part of profit that we take as an entity. Okay? So let's okay, good. Moving forward, unrealized profit in associates. So that would be what? 8,000, right? Minus what? 5,000. No be so.
Yes, sir.
But we are told that half of the goods were still in what? Inventory. It means the other half had already been realized. So here we are talking of times what? Half, right? But how many percentage can we take? 40 what? 40%. Does it make any sense? That's 1,500 times 0.4. And that would be what? 600.
Yes.
That's what we are going to adjust for as unrealized profit. Any question?
I have question. I'm
Go
confused.
ahead.
Yeah. The question, I don't understand the unrealized profit aspect of this issue, because I just felt that, in my own opinion, I felt that Makoko sold to Egbeda, and the profit supposed to be for Makoko, the associate, and the remaining, the 50% of that goods still in the store of Egbeda. Is it supposed to affect the profit of Makoko? I don't understand. Since it's for Egbeda, the goods is inside the Egbeda store.
Yes, but the concept is that Makoko should not have realized profit. It's an intra-group transaction. So anything that is going to be sold by both parties should not be sold with profit. So it's just like you are talking of related party transactions. Okay.
Okay.
So the whole concept there is that by selling it at a profit to Egbeda, it's as good as you are going to realize profit twice. Because when Makoko sold it at 8 million, it would have realized a profit of 3. Then
yes,
when Egbeda will finally sell it also, that's another profit is also going to recognize. So that's the concept. Okay.
Thank you, sir.
You're welcome. All right, let's continue.
Hello, ma. Hello, sir.
Okay, I'm with you. That should be Peter Jerry. Go ahead.
Yes, sir. In that case of unrealized profits,
Okay.
as per associates,
Okay.
which one will affect the value of our associates on equity basis? Is it
Which
the
one?
selling to the subsidiary or hello?
Hello, go ahead, yeah.
Is it Is it when the group sell to the associate company or when the associate company sell to the group?
Okay, if in the case that let's say either there's let me give you this way. If the subsidiary sold to the parent, the subsidiary is the one recognizing what profit, right? We are going to adjust that in our fair value of subsidiary net assets, okay? If the parent sold to the subsidiary, that adjustment would be done in our parent consolidated retained earnings. It will not affect this, okay? Now,
The minority.
yes, it will not. But yeah, why is it affecting here? Because it's still the parents that have sold to the associate. So in real sense, it will still come and affect our consolidated retained earnings. Are we together? It's coming to affect our what consolidated retained earnings in as much as it's going to affect what our investment also in associates, because it's a separate entity on its own. So what we are adjusting here is that the additional increase in the cost of sales as a result of our selling at a profit. Are we together? The additional increase in the cost of sales as a result of what? Selling on profit. Remember that we have taken a share of profit in associates, but what is within the associate is also an additional cost, or what we call profit, based on what we sold to the associate. Okay.
Okay.
All right. Is there another information that I've not used so far? I don't think so. Every information so far has been used. Okay. So we can prepare Marco Polo International Holdings Limited.
What of the group retaining earnings?
Oh, thank you so much. I thought I've solved that.
No.
So for the parents, as per question, how much?
555.
45,455. We can look at our share of par.
Yes.
9225. Times 60%. No be so. Then we less goodwill impairment. 60% of 9225. That should be 5,535.
5535.
Impairment. What was that? 3,005.
Yes.
We are lessing that, right? You know that associate has retained earnings. Our share of associate retained earnings. That's 2,000. I remember. And then we did impairment in associate.
800.
800. That lets it. And we also looked at what? Unrealized profits. That gave us what?
600.
600. So I can say SC workings 5. Because you need to refer the C workings 5, C workings 5, C workings 3, yes, C workings 2. Okay. And what will everything give us? 45455 plus 5535 minus 3005 minus 1002 minus 600. Or plus 1002, sorry. 48090. Okay. So
Not done workings for investment in associates.
Hmm?
So you've not done workings for investment in associates.
Is that somebody
Check working 5.
Somebody is sleeping. You're tired, Abby. I hope you're not staying in Lagos. All right. Because it's only people that stay in Lagos that should be tired. Makoko Intercontinental Holdings Limited. Consolidated statement. Don't mind my writing, because I hope you know that I'm writing on the screen.
Hello, sir.
Yeah, go ahead.
Please, how did you adjust for the 50% of Ojodu loan notes?
Okay, we'll get there.
All right. Thank you.
But note that I really did not talk about it because additional information one said he paid 90 what? Million outrightly, okay? It's different from if it says, oh, you acquire 60% of this and then this. So if let's say the question did not talk of how much it paid outrightly, then we have to treat it using that information. We'll first adjust, we get 60% of the equity share, and then we get 50% of the 10% of non-notes. But the question was fair to us. It gave us the exact price that it paid.
Yes.
Does it make sense?
Makes sense.
All right. But if let's say it were not given, then that is fair. But you see it as we go ahead, all right? But that's a brilliant question, at least. It shows that you are awake. How many of us are sure that we are going to pass this exam if we write it?
Me, sir.
If you are sure.
100%.
If you are sure, signify. If you are sure that you are going to pass, if you write it, signify.
We will pass that.
No, don't say we will. Say it if you are sure you are going to. Signify. Just raise up your hand. Let me do a sample.
I will pass.
By God's grace.
Don't worry. Don't be too religious about it. If you are sure, just raise up your hand. Let me see those who are sure that they will.
I believe my confidence level will increase very soon, sir.
So you are not sure that you will pass?
Yeah.
All right. Let me tell you why I asked that question anyway. Back then when I was preparing for ICANN, I always pay for tutorials, but I don't attend. I really don't have time. I was hustling for money. So mostly when it's time for my own lectures, I have classes I need to go and teach. But anytime I have time to go for class, and I just get to class and I see what they are learning, I just, don't worry, me, I don't pass this exam. And they just ask me, you have not read, but you are sure that you will pass. It's the confidence first. Because if you are not confident that you pass, no matter how much you read, it's the fear that will get hold of you in the exam.
Yeah.
So that's the logic. The confidence first.
It's key.
Okay. It's the day you lose confidence that it's that day you know that you will not pass that exam. And that's true for me. I think I've mentioned what I score in my PM when I wrote it. But I can tell you for a fact, in PM, I lost confidence. I think the PM will be the class that I attended the most lectures in ICANN. And that was the one I failed. Because I was attending lecture with fear. I should not fail. But anyway, if you know yourself, shall I didn't even attend lecture for SFM. No, I should never mention that one to anybody. If I mention that one, my SFM is God's grace, Gary. At least stop. I don't tell people I pass SFM because if I tell them like this, they will not believe. But because of the way I pass SFM,
it's how much you prepare. It's how much you prepare that will give you confidence.
Anyway, for me, when I did SFM, I was prepared to fail. The first time I wrote it, I didn't even read for it. I went to the exam with the intention that I wanted to fail it. I thought, what's the worst case scenario I will fail? Because then I wrote my final on scholarship anyway, so I was prepared for 3 papers. And I felt like, SFM and case study, anything that comes, that's their problem. But as God will have it, a night to the exam that I was reading, It was like all I read came out in the exam.
That's a miracle.
Man. But please don't believe such miracle. Don't let that miracle push you to not read.
Oh, yes. Oh, yes.
Sir, like me, this is my first time I'm attending lectures. Throughout my school, I've never attended any lecture. I just read on my own.
So,
And
so I always tell people, don't forget that I said that I was even ready to fail it. I did not go there with the intention that I want to pass. It was coincident. It was, yeah, I can't dare that it was coinciding with my school exam. So you can come back and write it. School exam, you cannot come back. So I have to choose one. So I was ready to come back to write it. But it happened, I passed it. So, but ultimately it's still confidence too. Because I was confident that I will go and fail it, Gary. My problem. Yeah. But when you begin to doubt yourself, even when the question is difficult, don't doubt yourself. I'm saying this, I don't know the one that you will remember in the exam. But when the question is difficult, if you go and check that's which diet, November, it's 2014, 15. That will be May 2015. May 2015. In PM, that was the first time I tested capital budgeting. It was not even in the study pack that you have now. It was never there. In the study pack that time, capital budgeting was not there. Learning curve was not there. Budget was not there in its entirety. That was the first time I tested it. That diet I was writing PM again. We were shedding tears in the exam, honestly. It was because there were 3 questions not in the syllabus, but
What wickedness?
It was not in the syllabus. It was after that diet, I can change the syllabus or change the study pack, included capital budgeting, learning curve. But for some of us that did not drop our pen, we're just interpreting in English. That's how we pass. So don't drop your pen. Even if it is rubbish, write it, Gary. Nobody will kill you because of that.
Better you write than not write.
At least your book must not be blank.
Because the truth is that the challenge you have in the exam, every other person may also be having the same. So you are not alone. All right. Let's quickly wrap up this because we'll take the second question. We have trade receivables. $12,850 plus 11,200. I hope you know why I'm not adjusting for the unrealized, the remaining inventory. Because that inventory is in Egbeda, okay?
Yes. Okay.
It's in Egbeda, it is not in Makoko nor Ojoju, okay? So we are consolidating only Ojoju.
The one we have control.
Control, exactly. $32,720 plus 14,100. All right. We supply figures. 32,100 plus 38,150.
80,250.
Okay. 12,850 plus 11,200. That's 24,50.
Yes, confirm.
32,720 plus 14,100. 46,820. I believe I should not you should know that you must get so used to your calculator. There are some people, it's on exam day, they are looking for a calculator. Your calculator naturally should be your friend. That you are so used to it in a way that you know how it operates, just like your cell phone. Yeah. Okay, I've not added this figure, 299,260. That's 453.80. All right, I will do the second leg, just for the sake of so what's OSC? What's our OSC as per question? 180,000.
Yes.
Retained earnings.
Working 6.
Please always include the working. So 48,090.
48,090.
Okay. So that should give us 228,090. We now have what? Our NCI. 51,490.
Yes, working 4.
That gives us what? 279,580.
Yes.
Abina.
Yes, sir.
Yes, sir.
We have total equity. So let's look at the non-current liability. Okay. 8% loan note. How much? 28,000. 10% loan note. How much will remain? 10,000. Go to the first question. First part of the question. He has acquired how many percentage of it?
50%.
50%.
So it will remain how much? 5,000. So 5,000 of that loan note, which is 50%, is part of our equity session because it has been what? Acquired. Are you with me?
Yes, sir.
Deferred taxation 6,308 plus 8,440. Are we together? The rest, I don't need to talk too much. You just add everything together to give you the answer. If it does not give you, then it's your addition and subtraction that is wrong. Okay. I don't think I need to do all of that. So. Or you want me to do it?
So let's finish it, sir.
Let's do it, sir.
Lack of confidence. Lack of confidence.
For security purpose.
Lack of confidence. But honestly, when I say confidence, I mean it though. I mean it though. Okay. So you can add up. Okay, I think we've now added up this 60,308 plus 8,440, 68,748 plus 5,000 plus 28,000 That is 101,748. So this is, somebody should calculate trade payables, another accruals, another provision.
Aye, sir.
Which one have you calculated?
I want to ask the question.
Accrual.
Okay, what's the figure?
13,345.
13,345. Who has calculated trade payables?
40,507.
40,000.
507.
507.
Provision 15,300.
407, sir.
407, sir.
Okay, 407.
Yeah.
Provision 15,300.
Is it 300 or 270? That's what I calculated though. Oh. So it
300.
means that I was sleeping when I did that calculation.
Okay.
So what's the total? I know somebody wanted to ask a question, but the question will come. That's 69,052.
Yes.
So we can now see our total equity and liability. $69,052 plus 101,748 plus 279,580 will give us 453.80. 453.80 that we have here, right?
Yes.
Okay, somebody wanted to ask a question. Can you please go ahead?
Why did you remove 5,000 from the 10% loan note?
Somebody explain.
Because in the question they said 50% of 10% loan notes of Ojodu Limited at par. So they paid 50% out of the 10,000 in the loan note.
Okay. Because as at the point of acquisition, we are told that 50% of the 10% loan note had been acquired.
Yes.
So just the same way you did not see the equity because 60% would have been taken by by Makoko. The other 40% will be under NCI, okay? When we came to the loan note as well, 50% of the loan note has also been taken by Makoko Limited. Makes sense?
Yes, sir. Hello, sir.
Hello, I'm with
Yeah,
you.
please, I need additional explanation on how provisions, how can we identify provision as a liability?
As a liability, I don't understand.
Like in this question, we have provisions categorized under current liabilities. Like,
okay.
how?
All right, I'm not going to really explain that as such in details anyway, but as much as this question is concerned, any items in the statement of financial position, you see that I did not use one item. And what was that item? Investment in what?
Associate.
Investment in subsidiaries. I did not use that because it's explicit. It's an investment in subsidiary. You may want to argue that, but it's like the amount in subsidiary is different. Are you with me?
So.
But to the extent that it is said investment in subsidiary, that is taken out. Now, when it comes to provisions, okay, which standard talks about provisions? IS what?
37.
IS 37. So it's IS 37 that explains more about provisions, okay?
Yes, sir.
And that I'll refer you to. But basically every item in group that deals with consolidated statement of financial position, if it is not an intra-group, you need to include it, okay? So the statement of financial position is say, the way they give it back to them. All right.
Yes, sir.
Like one of my AA lecturers will say, even if you do not remember anything again and your head should go blank, just add the balances together and submit it that way. You shall get score.
Yes.
At least they will mark you for trade payable, accrual, provision. They will mark that one for you.
Yes.
Okay. All right. Any question on this? None. The question B and the C part, I'm giving that to you as an assignment. Okay. So I want you to do that yourself.
I need the page for the assets for the consolidation, consolidated financial position. I need the asset side.
All right. So let's look at the second question. The second question will need our knowledge of IAS 21. All right. Have you done IAS 21 before?
No.
Okay.
I've not done IS 21 before.
Okay.
And again, sir, there is something I want to say. I need a request.
Right.
This very question, there is that we don't consolidate for the associate company, and some of us, we are new to the system, to the complex consolidation of associate, to the complex consolidation of profit of financial position. So
I'm struggling here. I know you are a big man, but please try and speak up a bit.
Okay, sir. That we are very new to the complex group, the consolidation of a subsidiary and associate, and we know that we doesn't consolidate for the associate. So we need a full video so that we can rehearse and practice again to understand more, sir.
All right. I think
Because
anybody can do us a favor. They can check the previous videos we've sent to the group and re-forward it again, please.
Okay, sir. Thank you so much.
And who wants to do us? I think there's one of my. I've not known all of you, but I know there are some names that appear always in this class. Suleiman Umar, I see that. I know I see that always in this class. I think Afiade also always in this class. Who do I see? That it's common. I think for now it's just
please, sir. I need somebody to explain the 6,500 of that freehold property.
Okay, who will explain?
600 what, sir?
6,500 freehold property.
No, it's in the additional information as we treat it as fair value adjustment. Check the additional
information.
Additional information. Additional information 2.
Yeah.
Fair value of the subsidiary.
Okay.
And then, sir, the last person that.
Which one is 65 million?
Where?
It's 6.2. 6.2.
No, there is 65 million in the real property. And there is 6.5 million.
65 million. Okay, this is it's 62. Sorry. $5,250 plus 62,000 plus 6,500,000. The total is correct. I think it was writing it that at least you know that one is typographical mistake.
Oh, I didn't know. I thought I missed something. That was why I wanted explanation.
If CSO can make mistake, who am I not to make mistake, Diana?
I don't see that. I thought I was one that was not concentrating.
Okay.
Then you are doing it.
Let's go to May 2017. The question is also a very simple question. However, I said it will require that we have a knowledge of IAS 21. In real sense, there's really nothing in IAS 21. Okay. Let me check if I have a summarized note of IAS 21. It might not be here. All of these things I don't keep them in my system again. I will explain in part. All right. But I will advise that you read IAS 21, okay?
Okay.
Because when it comes to foreign subsidiary, although there's really no big deal, what you need to know is conversion of the rate, okay, or conversion of the amount into the reporting amount, all right? So what you are trying to do there is at what value should it be presented? So take, for instance, a business let me say in what absolute value, currency denomination. So we are saying that, let's say a Nigerian company has a US subsidiary, okay? By implication, it means that the financial statement of the US subsidiary will be prepared in US dollars. No be so. But you need to translate it to Naira for the purpose of preparing what? Your group consolidated what? Financial statement. Are you with me? So it means that we are asking that how do we translate, or what you can say in other words, how do you convert from the subsidiary or associate currency, okay, to the parent currency? Are you with me?
Yes, sir.
So how do you translate from the foreign currency to the what? To the parent currency, okay? So these are the issues you will face is this. The questions is that what exchange rate are you getting me?
Yes, sir.
Should be used for what? Translation, all right?
Yes. Yes, sir.
First issue. So when you talk of assets, liability, what's the exchange rate that you should use, okay? And then the other issue is that how do you account for gain or losses, right, that arise when exchange rate changes, okay? Are we together?
Yes, sir. Yeah.
Those are the two issues, all right? So, because take, for instance, let's say the business activities during the year, perhaps as at as at May, dollar to naira was about 456, right? As at today, dollar to naira is how much? I think 757 or 775, thereabout. Not 1,000 that you are shouting there. That one is black market though. Businesses don't use black market. So all of those things had changed, okay? So in essence, how do you account for the losses and what? And for the losses and gains that could have been what? Been made. Are we together? In accordance with IS 21, let me explain some terminology. I'm trying to just explain in brief. There are three concepts we have there. We call presentation currency, functional currency, and the word foreign currency.
Okay.
So the presentation currency is the currency in which the financial statements of an entity are presented. So in what currency? Currency in which the AFS is what? Presented. But the functional currency is the currency of the primary economic environment in which the entity operates. Are you getting me? In which the entity operates. Let me try and give you an instance that I think that instance might make sense. In countries like Liberia, okay? I know Liberia, DR Congo, Zimbabwe. Countries like there, they have their local currency. Are you getting me? Yeah. And they also use the US dollars. Okay? They have their local currency and they also use the US dollars. So you can say in such places, you can see perhaps the AFS is presented in what? Perhaps in dollars. Are we together? But the primary economic environment in which they operate, the currency may be in the local currency. Are we together? So what you questions might ask you that, oh, maybe they'll give you a scenario and ask you for the functional currency. That's always common. And when we talk of functional currency, the functional currency is the currency that influences the sales price of goods and services. What is the currency influencing the prices of goods and services? What's the currency influencing labor, materials, and other costs of providing goods and services? Are we together? You know, it's of recent times that dollar is influencing things in Nigeria. I want to believe 10 years ago, even 10 years ago, nobody cares about what the dollar is. Now only on top news with the year. But now, I remember, give or take, maybe 7 years ago, some of us have never even seen dollar before.
No, sir.
Maybe 7 years, 6 years.
Some people doesn't know what dollar looks like.
Some of us never knew. I'm not saying myself, I don't even know what dollar looked like maybe until when? That was 2018 thereabouts. But now it is difficult for you not to. Hardly will you see somebody that does not know what the dollar looks like. It's becoming more or less like a functional currency. Oh, when you go to the market and you want to buy pepper that comes from the north, they will tell you dollar has increased. So in concept, I our presentation currency for financial statement in Nigeria is still Naira, but in some businesses, it is influenced by other words, currencies, okay? So when we talk of functional currency, we will look at currency in which funds are also generated by issuing debt and equity, or currencies in which receipts from operating activities are usually retained. So those are the basic thing I think you should know. Are we together?
Yes, sir, we are.
Yes.
Okay. Is there another thing I think we should note? Let me, so that as I solve that question, I want to believe that it would have provided at least it should have provided a kind of grounding for us. Okay. All right. Okay, good. Let me try and explain this concept too. That also may be important, but it's important. Should I explain it? Should I explain it? Don't worry, I will explain it as I solve the question. Don't worry. Okay. All right, so let's look at that question, May 2017. And I really don't want to explain it. This last concept I want to explain. I actually don't want to explain it so that you cram it by theory, okay? But I want you to look at common sense, all right? I like to teach the theory and I have to teach what makes sense so that in case when you are faced as such an exam, you can at least apply some level of intelligence. Remember I said something at the beginning of this class. If accountants understand English, note my word, if we understand, it's not different from speaking. A lot of us will pass our exams. But in accountants, we don't understand it. It's figures we understand. So that's our problem. All right.
The English at times is somehow complex.
It's not complex. Okay. No wala. So that you go to court to define and for you. All right. Let's go ahead. A volunteer to help us read that question. It's a simple question.
Yeah, I'll read.
Okay.
Rabuya PLC.
If you had to read the question, where should you start from?
Oh, sorry, requirement. Sorry.
That's the trick for you in exam. Start from the requirement. Know what you're asked to do. So as you read the question, you are looking for what traces. Okay? All right. So go ahead.
Okay, so requirement 1. Advise the finance controller on what currency should be taken as the functional currency of Soma Limited, applying the principles set out in IAS 21, the effect of changes in foreign exchange rate. Requirement 2. Prepare a consolidated statement of financial position of the Rabuya Group as at April 30, 2017, in accordance with International Financial Reporting Standard, IFRS. Show all workings, 25 marks. So question 1. Rabuya PLC is a Nigerian public limited company operating in the mining industry. The draft statement of financial position of Rabuya PLC and its two subsidiaries, Tutor Limited and Soma Limited, as at April 30, 2017 are as follows. assuming all figures to be correct. So the following information is relevant to the preparation of the group financial statement. On May 1st, 2016, Rabuya acquired 52% of the ordinary shares of Soma Limited, a foreign subsidiary. The retained earnings of Soma Limited on this date were 220 million DFAs. The fair value of the identifiable net asset of Soma Limited on May 1st, 2016 was 990 million DFAs. The excess of the fair value over the net asset of Soma Limited is due to an increase in the value of non-depreciable land. Rabuya plc wishes to use the full goodwill method to consolidate the financial statement of Soma. The fair value of the non-controlling interest in Soma Limited at May 1st, 2016 was 500 million DFAs. Soma Limited is located in Tom, a small country in West Africa, and operates a mine. The income of Soma Limited is denominated and settled in DFAs. The output of the mine is routinely traded in DFAs, and its price is determined initially by local supply and demand. Soma Limited pays 30% of its cost and expense in Naira, with the remainder being incurred locally and settled in DFAs. Soma's management has a considerable degree of authority and autonomy in carrying out the operations of Soma Limited and is not dependent upon group companies for financial support. The finance controller is not certain from the above whether the DFAs or Naira should be taken as the functional currency of Soma Limited. There have been no issue of ordinary shares and no impairment of goodwill since acquisition. Also on May 1st, 2016, Rabuya plc had acquired 70% of the equity.
I just stop there for now. Let's just stop there. Now, even though you've not done IS 21 before, let me ask all of you, you've not done IS 21 before, but based on what I've explained about functional currency, coming to question number 1, what should be the functional currency of Soma Limited?
That's the differ.
Why?
The differ because they used to pay the expenses and then acquire other materials.
Okay, that's a nice point. Anyone who wants to try again?
Because it's the currency for their primary economic activity.
Yeah, it's a currency for their primary economic activity. Okay, that's a nice point. So you see that last paragraph, every point there seems relevant to it. Soma's management also have a considerable degree of authority and autonomy in carrying out their operations. Okay, so they are not dependent on the group of financial support.
Yes.
Okay. So you see, it just mere English. Even though if you don't know IS 21 really like that, just move on with that and you are fine. Are we together?
Yes.
Okay, don't worry. This second part, don't read it. That one is a normal jargon we always read. Okay? Normal jargon. But let's go to additional information 3. The following exchange rates are relevant for the preparation of the group financial statements. Okay. This is the part I said, let me test your capacity to apply. I don't want to use that word, yeah, but that's the best word that will come. To apply common sense. I'm trying not to use that word, but that's just the meaning. Let me just see. Let's test our ability. Are you with me?
Yes, sir.
Let's see. On May 1, 2016.
Yes, sir.
What's the value of differs to Naira?
That's 3:1.
What's the meaning of that 3:1? 3
3
differs to
differs.
Naira. So if you have 300 Naira, how much will it be in differs?
100.
What did you say?
You are wrong.
100.
If you have 300 Naira, how much will it be in differs?
900.
900 differs.
100.
Which one should I now take now?
You say what, sir?
900
It's
differs.
times 3.
You say, sir?
It's times
You say
3.
And if you have 300 Naira, how much will it be in differs?
I don't understand.
900.
That's 100, sir.
100.
100. You'd buy it. You'd buy it.
Okay.
By 3.
Anyway, if you have 300 Naira in differs, that would be 900. You multiply by 3.
Yes.
Because the meaning is that what you have is differs to Naira. It means that 1 Naira is equals to what?
3
differs.
Yeah.
Yes.
So 300 Naira is equals to what?
900
differs.
Wahala dey.
Wahala no
So,
dey.
to ask, when are you supposed to divide?
Then, okay. Oh yeah, let's start by this. How much is dollar to Naira in black market?
1,000.
1,100.
Oh yeah, let's say
1,050 Naira.
Oh yeah, let's take it for 1,000 Naira. So if you have $10,000, how much will it be in Naira?
Help me to get it though. I need it.
How much will it be in Naira?
$10,000.
If you have $10,000, how much will it be in Naira? If you have $10,000, how much will it be
That
in
is
Naira?
10 million. That is 10 million.
That is 10
So
million.
did you multiply or you divided?
I multiply it.
And if you have 50 million Naira, how much will it be in dollars?
15 million.
50 million. How much is it in dollars?
50,000.
At the rate of 1,000. That's how much?
50,000.
$50,000. I think I've answered the question of the person who asks, when do we divide, when do we add?
Yes,
sir.
I'm sure that the person has written SFM, Abi.
No.
That exchange rate is part of
performance management.
I don't even know which topic it is, but I know that they were always doing it then.
It's under Forex.
Oh, it's no longer in SFM.
It is there now. That's under currency stuff.
I've told you the way I pass SFM. So SFM is the only course in ICANN I will tell you I have zero knowledge about. That one.
Oh Lord, my God.
I'm a poor student of SFM. Apart from that, there's practically no course in ICANN I cannot teach anybody.
But I want to ask a question.
Go ahead.
Will you be willing to write SFM again? So I can have knowledge.
Anyway, the truth is that after I passed it, I wish I had failed it.
So that you can know.
So that I can know. I don't like doing an exam, I don't know what I did.
Yeah, I'm with you, sir.
I'm going to write SFM next diet. Maybe you should do it together.
I'm with you, sir. Even me to say I passed this corporate report, I will not learn anything about it.
But for me,
because next time I understand I'm not even ready to pass this course because I use what I have only read in financial reporting. So I did not read much. I think say I will just get 2 or 3 topics to help me pass.
But anyway, don't worry. I will not need to write ICANN with you to know SFM.
Okay.
I'll go and do my MS in finance.
Okay.
Just for the sake of knowing it. Yeah.
But I need the moral support.
Okay. You get the moral support from those who are preparing for exam.
Okay.
You know, exam is a motivation itself.
I tell you.
If you have no cause to write something, you are not motivated now. All right, now let's look at this together and let's try and apply common sense. Okay. Property, plant, and equipment. At what rate do you think it should be converted?
At closing rate.
Why?
The
property, plant, and equipment. At what rate do you think it should be converted? It should be translated.
Should
it be at the rate of, remember that the statement of financial position there is
April 30th, 2017.
2017. So at what rate do you think property, plant, and equipment should be translated? Is it the value of 2016 or 2017?
3 to 1.
2017.
3 to 1. 3 to 1. 36. No, wait.
2.5 to 1.
2.5 to 1. Why? Why do you think so?
Because that is at the date of at the date of consolidation, that's the one we use. So.
Yes, that's the date of acquisition.
The date of consolidation is April 30, 2017. And
Okay.
that is the conversion rate at that time.
Okay. All right. Okay. So, all right. So, if you are saying 2.5, that is the April 30th, 2017, I want to agree with you. Okay. If you use the one of May 1st, 2016, I'm trying to just help you see it in just at least without explaining the whole of IS 21. If you use this rate, the danger is that there would have been some additions during the year, right? There would have been some additions during the year, some movement in the assets, in PPE, okay? So the best rate you can have is use this word. Use this rate. Use the rate at the end of the year. What's the value of the assets to you at the end of the year? That's the best thing you can do. What of financial assets?
That's historical, so financial assets.
Yeah, financial assets.
Average.
I'm looking at the financial statement of Soma alone.
Yes, sir.
Soma.
Yes, sir.
What if the examiner specify?
All right, so let me also give you this logic anyway. You see this average, okay? Average can really work when you are dealing with statement of profit or loss items. When you are dealing with what? Statement of profit or loss what? Items. So let me give you this instance, just as we are saying, okay, perhaps you are looking at what's the black market rate, or even what's the official rate. You know, the official rate is determined by the I and E windows, okay? But that rate is not fixed every day. It changes, right? So for your business activities, your daily business activity, you have to determine a particular rate. Are you with me? Because you cannot be using a dollar rate today, it changes tomorrow, even though the differences are not significant. Are you getting me? It's 775 today, it is 776, it closed at 778, it returns to 774. At that point, you are using what? The what? The average. Are you with me? Hello, are you with me?
Yes, sir.
Yeah.
But when it
Yes, we are here.
comes to assets will mean that in
That's true.
IS21, all non-current asset and inventory, they are non-monetary items, okay? They are always translated at the spot rate. So that is the rate, that closing rate that you have, okay? That's the rule anyway. I actually did not want to explain the rule.
Yes, sir.
Okay? So they are always translated at the spot what?
Rate.
Okay? So the spot rate on the date of the what? Of the transaction. So we mean that what is the rate prevailing at the date of what? Of the transaction. Are we together?
Yes, sir.
So but I've explained average rate is always for it occurs when exchange rate fluctuates. Are we together?
So
when there's a fluctuation, but it deals more daily operations, okay? When you buy goods or services that will be paid in another currency, sell goods or services, invoice in another currency, for the purposes of disposing on current assets in another currency, if you are to receive dividends, another payment in another currency, you can always use the word average rate. Are we together? Are you with me?
Yes, sir.
All right. But when we talk of monetary items are payables and trade payables, trade receivables. Those ones are what we call the monetary what? Monetary items. Okay, those ones are what we call the monetary items. You are also using what? The spot rate too. That is the closing rate. Okay. That's what you have to use. You have to use the what? The closing rate. Okay. So you translate them at the word closing rate. But so for the non-monetary like fixed assets, the spot rate, that is the rate at their purchase, are we together? Or you can say it can also be the closing rate if you are not given. Okay. It can also be the closing rate if you are not what? If you are not what? If you are not given. Okay. So the basic thing you translate at the opening rate. Are you with me? I'm trying to say that you translate at the opening rate will be your OSC. Okay. You can also translate your pre-acquisition retained what? Earnings. Pre-acquisition what? Retained earnings. So those are items in your equity section, okay? Which perhaps at some point in time had not changed, okay? Your pre-acquisition what? Retained what? Earnings. So basically things that concerns your equity section, okay? Because your OSC does not change during the year. Are you with me?
So
your OSC does not what? Hardly changes during the year. So for that, oftentimes it's always at that what rate. But when it comes to your non-current assets, either your closing rate or the rate at which those transactions took place, those are the yardstick. All right. Okay, let me do this then. I want to quickly do this because this is 11 p.m. already.
I like serious.
It's
11 p.m. Like serious.
Yes, sir.
This class can even lead to
and if you are not ready to sleep, I should not kill myself because of you. You are the one writing the exam. I'm not the one. Or are you not doing writing exam?
Hope sir, your wife will not complain, Abi.
Nobody
Hello?
complains.
We are not complaining.
Not at all. Though.
We are not complaining.
I said she's not complaining, Abi.
Let's move on. Let's move on.
If we are reading this by ourselves, it's not going to be easy. We have been sleeping by now, but we are very much awake.
All right, let's go ahead. All right. Oftentimes I stay late anyway.
Thank you, sir.
I still have. I think I tend to be reading more than those who are writing exams.
It happens sometimes.
Okay, so, but anyway, for this one, this is what I'm going to do. I'm only translating what you have here. Okay. And then I'll leave you to go and solve the question. If I translate it, every other thing is simple for you.
Okay.
You don't have OC, you now have current words. So I only pick the items under Soma, okay? Because we have to change it back to Naira. So PP will be translated at 2.5, financial asset 2.5, share capital, that's the opening rate. Oh, retained earnings, I need to split retained earnings into two, okay? So that one will reflect the pre-acquisition, okay? Remember, it is acquisition at the beginning of the year, I guess. Right?
Yes, sir.
It's acquisition at the beginning of the year now, or May 1, 2016.
Yes, sir.
So do not forget I've said that when you are using average, it is mostly for statement of profit or loss item. On rare occasions, you have cost to even use it. Only if you are told that there is fluctuation in the year, okay?
Current assets. You omitted current assets.
Is there current assets for Soma?
Yes.
Oh, okay. Okay, there were nothing was listed, Seth, I thought. So we have post-acquisition. What's the pre-acquisition retained earnings of Soma?
20 million.
220. Additional information 1. Okay.
Yes.
Then the post-acquisition will be what? 3 what?
80.
380. Okay. So now the pre-acquisition will be converted at what? 3.0. Okay. But you see this one. Are you listening? Hello, are you with me?
Yeah, yeah.
Yes, sir.
Let me do it this way. This other aspect, there's always I hope before next class we would have some of us might have studied IS 21, but if worst case scenario, I'll have to teach you guys. I want to put all the assets together because when it comes to the liability section, you know, total asset must be equal to total equity and liability. I hope you get that.
Yes, sir.
So there's something that will always apply there to give us, and that will even explain the concept of average, okay? Pre-acquisition is 220, right? Post-acquisition is what? 380. Non-current liability, what do we have there? How much is non-current liability as per question? 320.
20.
Current liability is how much?
It's 200.
200. All right. So non-current liability will be at the closing rate. This will be at the opening rate, and this also will be at the opening what rate. Let's convert. 760 by 2.5. 304, right? 100 divided by 2.5 will give us 40. No be so.
Yes, sir.
660 divided by 2.5.
This is
will give us,
264.
if we add up everything, what would that be?
Sir, please, why are you dividing those ones?
I'm doing exchange rate. Just imagine it is dollar.
That's we have
I
608.
thought if you are converting it to naira, it should be multiplied.
Should it be? We are told that 1 naira is how much? 2.5.
Is in naira already? We're converting.
These ones are differs. We are converting it to naira. Huh?
Okay.
Didn't I say if you have 300 naira and you want to convert it and the conversion is 3:1, Abi? We said it will give you what? 900 differs, Abi?
Yes.
So if it is 900 differs to naira, won't you divide it
You're
by
going to
3?
divide it. Yes, you're going to divide.
Some of us don't use this thing, chop amala.
It's not easy.
That's the problem of this topic. You end up having wrong figures.
660 is divided by.
All right. So it means the total asset is 608 million naira, right?
Yes, sir.
It also means that our liability and equity must also give us the same thing. No be so.
Yes, sir.
Are you getting me?
Yes.
So 400 divided by 3 will give us 133, right?
Yes.
220 divided by 3 will give us what? Will give us 73.
73.3.
Let me remove this. You see, I did not put any rate here, right?
Yeah.
And I will explain. Because those ones are operations that happened during the year. Okay?
That's
The
128.
operations that happens during the year. Okay? So normally it should have been at the what? Average rate. Are we together?
Yes, sir.
This one
The last
should have
one.
been at the what? Average what? Rate. But the challenge is that let's convert it at the average rate. What will it be? Average rate is 2.9, right?
Yes.
380 divided by 2.9, it gives us. If you add everything together, does it give you 608?
No, it will give 545.
545. So the meaning is that as at the mean during the year, a different rate must have been used during the year. So what you just do is that the difference between 608 and this total will be what will be the value you have here.
Yeah, just a balanced figure.
That will be the balancing figure. Exactly.
Yes,
Thank you for borrowing me that word. I'll return it back to you tomorrow. Okay. So that will be the balancing figure. So the balancing figure here will be what? 194.
Okay.
All right. And that will give us what? 608. Are you with me?
Yes, sir.
Do you understand what I just did here? It may not make sense at the beginning, don't worry. But at least you know what I did. So having converted it to naira, you can go ahead and attempt that question. Okay? Hopefully, I'll see you next week. I only have 2 more questions to solve for you. If I'm to predict, I know ICANN is not testing joint subsidiary. Like the question I solved last 2 weeks ago, they will not test that one. They've tested it in May and November. It's too cheap to be tested.
But I don't know, sir.
Have you done cash flow?
Hello, sir.
Yes, go ahead.
I thought I have 2 issues here. I thought we are going to have a class for this cash flow and then is it financial analysis? Don't know, ratio analysis.
Well, anyway, I'll have to take you through per account. Let's see cash flow. I mean, all of you shall like work. You shall like that. You shall want to. You shall want to. You shall want to. Anyway, that's how.
And then also, sir, I don't know. I have an issue with this indirect control because I've seen some caution. They will just do some manipulation to arrive at the other subsidiary. That's A acquire B, B acquire C, then C acquire D. So I don't know if you can
Okay,
help
if you
us
have such
explain.
concern, you can just message me privately. And if when you solve questions, I have concerns. Message me privately. I may not reply you immediately. Let me be honest with you. I'm trying to struggle with time now, but nonetheless, I will do all I can to ensure that I reply. Right?
So thank you.
All right. So please attempt that question, but either way, we will look at it again together. All right. So I think on this note tonight, we'll call it an evening. I know it's not easy, but all you just need to look out for is look at the purpose to which you are writing the exam. That's just it. And let that purpose drive you. It's not easy to be an ACA, but perhaps it's just the goal. Some of us need it for career growth, job prospects, some for the fun of it. But regardless of that, it's just the focus you keep in mind. And I always tell people, it's better you pay the sacrifice once and for all. Because ICANN is so funny that if you fail and you want to write it again, you read as if you've never read before. So it's better you kill yourself now.
Yes.
Within the next
you know more.
6 weeks, 7 weeks. And you know that you're not coming back to this problem again.
Yes, sir.
So that you can look further ahead. But if you do a partial preparation, that may not make sense. So I wish you well as you study. Think ICANN anywhere you go. Think the topics you've learned. No matter how busy your work may be, don't worry. Just try and do all you can and you'll get there. See you guys hopefully next week. And
next week, next week is too far.
Thank you, sir.
Next week is too far.
It's too far to see you.
Yes, sir. You need to create